Hello there and welcome. If you're a sole trader or a landlord here in the UK, I need you to listen up. The way you handle your taxes is about to go through the biggest shakeup in a generation.
You heard that right. Starting in April 2026, that yearly dash to get your self-assessment tax return filed is being replaced. A completely new digital-first system is coming, and it's coming a lot sooner than you might think. Now, to make sure you get the absolute clearest, most up-to-date information on this massive shift, we've brought you this guide, which has been developed by the experts over at My Tax Accountant. They're going to walk us through exactly what's changing and what you need to do to stay ahead.
So here's what we've got lined up. First, we'll look at why this huge change is happening. Then, we'll get into the key dates so you can figure out if you're affected. We'll break down the 3 massive new rules, get to grips with the new penalty system, and then wrap up with a clear action plan so you know exactly what to do next.
Okay, let's dive right in. A new era for tax. Why on earth is HMRC making such a monumental change? Well, it all comes down to one big government plan.
It's called Making Tax Digital for Income Tax Self-Assessment. It's a bit of a mouthful, I know, so people just call it MTD for ITSA. In simple terms, we're moving away from one single tax return a year to a system where you must keep all your business records digitally and send regular updates to HMRC using special, approved software.
But why? What's the point of all this? Well, it comes down to a number, a really big number. HMRC says there's a $5 billion tax gap in self-assessment. That's money that should be paid in tax but isn't, mostly because of simple, honest mistakes. HMRC believes that going digital will stop a lot of these errors and make the whole system more accurate and efficient for everyone.
Okay, so that's the why. Now for the really important bit. Who's affected and when does this all kick in? This next section is crucial, so let's see if these new rules apply to you.
Right, so MTD is being rolled out in 2 main stages. The first wave starts on the 6th of April 2026. This applies to you if your total qualifying income is over £50,000, and HMRC will be looking at your income from the 2024 to 25 tax year to figure that out. The second wave starts a year later on April 6, 2027, and that's for everyone with a qualifying income over £30,000.
Now listen very closely to this next part, because this is the #1 thing that catches people out. The term is qualifying income. This is not your profit, it's your total turnover, the entire amount of money you bring in from your self-employment and any property income before you take away a single penny for expenses.
Let's make this real. Let's meet Alex, a freelance designer in Manchester. Alex makes £40,000 from design work and also gets £12,000 a year in rent from a flat. You add those together, and Alex's total qualifying income is £52,000. Now, after taking away £15,000 in expenses, Alex's actual profit is only £37,000. But for MTD, it's that £52,000 figure that counts. Because it's over the 50K threshold, Alex has to join the new system from April 2026. This shows just how important it is to look at your turnover, not your profit.
So, now that we know who's in and when, what do you actually have to do differently? Well, the whole system is built on 3 brand new core rules.
These are the 3 pillars of making tax digital. First, you've got to keep all your records digitally. The shoebox full of receipts is officially a thing of the past. Second, you have to send a summary of your income and expenses to HMRC 4 times a year. And third, at the end of the tax year, you submit a final declaration to wrap it all up. Let's look at each one.
So, rule number 1, digital records. This means you have to use software. And here's the catch, HMRC is not providing this for free. You have to pick a commercial product from their approved list. You've basically got 2 options. You can go for full-blown accounting software like Xero or QuickBooks, which does everything for you. Or, if you love your spreadsheets, you can use something called bridging software, which basically connects your spreadsheet to HMRC's system.
Next up are those quarterly updates. Now, this is probably the biggest change to your yearly routine. Instead of one big deadline, you now have 4 smaller ones. As you can see, you get about a month after each quarter ends to send in your summary. Just think of them as quick mini updates for HMRC. They're not full tax returns. So what's the point of all this extra work? Well, there is a big benefit. After each update you send, your software will give you a running estimate of your tax bill for the year. This is an absolutely fantastic planning tool. It means you can see how much you're likely to owe as you go along, which helps you put money aside and avoid that horrible shock when the final bill comes in.
That's not all. Here's where things get really serious. With new rules come new penalties. This next part is absolutely crucial for avoiding fines, so please stay with me. HMRC is bringing in a totally new points-based system for any late submissions.
It works a bit like a driving license. For every single deadline you miss, you automatically get 1 penalty point.
And those points add up. Once you get to 4 points for your quarterly submissions, you've hit the penalty threshold. That means an immediate £200 fine. And here's the kicker. For every other deadline you miss while you're on 4 points, you'll get another £200 fine. You can see how quickly those costs could start to spiral.
So how do you wipe the slate clean? Well, to get your points back to 0, you have to prove you can get it right. That means submitting everything on time without fail for a full 12-month period. A perfect record is the only way to reset the counter.
Okay, I know that all sounds a bit daunting, but please don't worry. With a bit of forward planning, this whole transition can be really smooth. So, let's shift gears and focus on a clear, simple path forward.
Here is your simple 3-step action plan. Number 1, get your figures for the 2024-25 tax year and work out your qualifying income right now to see if you're in that first wave. Number 2, start looking at software. Check out HMRC's approved list and see what might work for you. And number 3, probably the most important step, get some expert advice. Please don't try to go it alone.
And that brings us to our final and, frankly, most crucial point. Making tax digital is a big, complex change. And while being prepared is half the battle, getting professional help is really the best way to guarantee a stress-free switch.
You see, the key thing to remember is this. MTD isn't just about getting new software. It's a fundamental change in how you manage your business finances all year round. So the real question you need to ask yourself is this: are you ready for that change?
Now, just before we wrap up, a quick disclaimer. The information we've shared today is for general guidance only. It shouldn't be your only source for making financial decisions, as tax rules are complex and everyone's situation is unique.
So, before making any decisions, we strongly recommend you consult the experts at My Tax Accountant. Their team can give you the tailored advice you need to navigate this with total confidence. You can give them a call on 0208 570 8531, or you can email them at info@mytaxaccountant.co.uk. Thanks so much for your time.